Hey guys, you know what has really changed my life as a trader and investor over the past just couple of years or so? It's these devices. Over the past couple of years, we've had a couple of dramatic changes in terms of your phone or smartphone sizes. They've gotten much larger. So, like for example, the iPhone 7 Plus, which is what I use for my trading, which is what I'm recording this with right now. This is my iPad something, which I use as well. But it's really the iPhone, what I'm referring to. The sizes have gotten much larger. Of course, Android makes larger phone sizes as well. They've actually made them a little bit longer. But it's that combined with the broker software. The broker software has finally gotten to the point, and any market research software from that perspective, stock market research, has gotten a lot better over the past couple of years only. Now, I've always advocated this sort of mobile lifestyle, but really only over the past couple of years do I think that the software coupled with the hardware has gotten good enough so that you can truly do this stuff on the go. Like I actually just got back from the gym and I executed a trade pre-market from the gym, stuff that I researched last night actually. So I like to advocate that you need some more desktop real estate. Like for example, what I have back here, you don't need 4 screens. I actually have a bunch more. But I think 1 or 2 bigger screens is actually good to have. Even just one here, like here's another one right here, is good enough for your sort of evening research or morning research. But a lot of in fact, I would argue all of your execution and monitoring of the market can be done on the go using these devices. Again, the software and the hardware have finally gotten to the point where I think they are good enough. So that's a bit of a tip here as we round out this week. Now, of course, this week we had the FOMC. We had Janet Yellen basically raising rates one more time and giving somewhat of a dovish, hawkish outlook. I want to give you guys a couple pointers at where I think the market is right now as we round up this week, head into the weekend, and what it might mean for various parts of the market. So let's move into the charts.
So one of the things that I always tell my Clubhouse members and my students and really the broader audience in general is that you can learn a lot by just watching the stock market. That's one of the great things. You don't have to go actually too deep. If you really pay attention on the surface, you can kind of see what's going on. That's what I'm trying to teach you guys in these videos, at least in part. So let's have a look at the S&P 500, and then we'll talk about Apple, which is a stock that I talked about earlier this week, which is actually doing exactly what I thought it would do after the Fed. So let's have a look at it. So first of all, the S&P 500, you can see that yellow line here. That's representing the 21-day moving average. Some people like to use a 28-day moving average. Honestly, it's about the same. I wouldn't split peas here. But the point is, the 21-day moving average has been holding very, very well here for an extended period of time. Really, we broke below it once real quick in the last trading day of 2016, but ever since it's been holding. So you can see once again, we bounced off of that moving average just a couple days ago on, I guess that was Tuesday. And so that's kind of all I can tell you. We continue to trend higher from that perspective. So once we start seeing these 21-day moving average, that's really the focus here from a directional perspective. Once we start seeing these start to crack in the broader index like the S&P 500, I think then that would be something to be concerned about. And that can happen anytime. But right now, so as I'm recording this, that's still holding. So be on the lookout for that if and when we start actually breaking below the 21-day on a daily basis. I think that would be a reason enough to start being a little bit more cautious. Now let's talk about Apple real quick. Again, I talked about Apple earlier this week. I mentioned more or less the same thing. It's a very similar phenomenon here. You can see the 21-day moving average. Again, that's that yellow line. You can see we bounced off of that actually 2 Thursdays ago now at this point, and we continue to break higher. I talked about this, how Apple was coiling up a couple days ago actually in the last video. Talk about how the stock was just coiling up here and looking like it could push higher. I said a push above 140-ish could release the stock higher, and then in 2-point increments, 142, 142, 144, and so on and so forth, potentially. So that's working out so far. Again, here too, I'd look out for the 21-day moving average. Let's look at a couple of sectors real quick. One part of the market that continues to give us mixed signals, but actually looks pretty good on balance is healthcare. And healthcare, for the most part, if you look at the XLV ETF, here's what that looks like. I'm going to give you guys the weekly chart to kind of give you a bit of a bigger picture view, but you can see we continue to basically break higher here. Even though we had a bit of weakness here the last 24 hours or so as of this recording, we do look like we want to push higher. So there's really not a whole lot of reason here to be too concerned until we see a bearish reversal here too. You can apply the same analysis. We can go in and use that 21-day moving average. And you can see we're still trading well above this. So not until those things give the 21 days or the 20 days. Again, it honestly doesn't really matter. People try to make a big difference. I'm telling you, it doesn't matter whether you're using a 20 or a 21 day for the most part, unless maybe you're super tightly day trading or something like that. So watch for that. That's really my biggest thing I will tell you. Otherwise, you can kind of continue to play along the trend. I do think momentum certainly has come out of the market over the past couple months on the upside, but more or less we continue to trend higher. And that's that. Hope you guys have a great weekend, and I'll see you in the next video.